Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Well, definitely a weak day for the markets. We have the Bank Nifty, which is now down over 400 odd points. We have the mid-cap index, which is down over 300 odd points, and an almost 800 point cut that we can see on the Sensex as we speak. Just watch out for a couple of stocks which are managing to buck the trend. So Dishman is up around 12.5% after what was a turnaround on the operational front, and Fortis Healthcare after it held its conference call midday yesterday during market hours. That stock is up around 9.5% today. So definitely some amount of positive outcome there. But let's talk about a couple of companies then. Gulf Oil Lubricants is the next management on the show. It reported what was a steady set. Margins, however, came in flat. We have with us Ravi Chawla, who's the MD and CEO of Gulf Oil Lubricants, joining in to talk about the numbers. Mr. Chawla, welcome to the show. Well, before we start talking about the margin picture, just wanted to understand the entire volume picture. If you can just break up what the core lubricant volumes were this quarter, as well as, say, for example, what you did in the B2B segment when it came to infra and industrial. Was it probably as good as the previous quarters where you did record, the highest ever volumes?
Well, on the volumes, this quarter we've closed at the highest volume ever in a quarter, 39,500 for lubricants, which is about a 7% growth. Even the year has similar, we've closed at 152,000 KL, which is again a 7% growth. So if we have about 10% of business in factory fill, that didn't go very well. If we take out that, we've been at 9%, but 7% is the record. And as you spoke about the industrial IMF, that has continued to grow. And overall, also, we have seen, a good steady quarter. And we managed the margins well because you did have in that quarter, in the quarter four, you did have some exchange rate issues. But we managed that well. And I think this is also the highest margin. And as predicted in the 12 to 14% band, this is 13.6. So I think the quarter has been a steady, good growth quarter and a record year in terms of our profits also have gone up 17%. So I think a good year and a good end to the year in quarter four.
Where does your market share stand at the end of this year? And if you could also break up your revenue in terms of industrial and non-industrial businesses, how much is that contributed? What's your outlook for the next year?
So our B2C business is about 53-54%. The rest is the B2B, which, as you said, of course, the products differ because some automotive products go into industrial. So that we have kept that, and all segments have grown. And I think in terms of overall, I would say that the growth that we have been gaining over the last many years has been to grow 2x the market. So even this year, I think we've been growing in across segments, our key segments. So we have gained close to about 0.4 or 0.5% market share.
And where does it stand at right now?
So in different segments, in diesel engine oils, we are close to double digit, and motorcycle oils. The others, we are around 6 to 7%.
Okay. Now, just coming to the margins, you've seen a fantastic growth in terms of volumes, but your margins have remained flat on a year-on-year basis at 13.5%, and you've closed FY25 with a lower margin of around 12 odd percent. Take us through what the key drivers are, how is crude impacting this at current prices, and what are you targeting in FY26?
Yeah, so typically crude will, the base oils that are derived from crude, they follow crude. But we have also seen that base oils, because of the different availabilities, doesn't necessarily follow it all the time. But yes, there is a lag which comes. So I think this year has been challenging in the sense that the exchange rate also plays a role. And we have been able to look at all our segments growing. And we continue to invest in the brand and our, marketing activities. So I think for us, we are looking at this 12 to 14% band, because we believe that is where we are, and also trying to focus on premium products, improving the mix. So we hope we can move to a 14 to 16%, but definitely we would require stable prices of, base oil. But I think that is where we hope that now with the current, cool off in terms of crude, we are able to see that so that we can move to the next band.
All right, we will await the next band. If you could give us some color on what proportion of your revenue currently comes in from premium, and what are you targeting out here since you are looking at increasing your premium contribution?
So we have typically synthetics and semi-synthetics. For us is still less than 5%. So great opportunity for us. And we do have other products which are, I would say products which give us a better margin. So a combination of these, we've been trying to in the last 1 year, try to improve that. So if we've been growing 7% overall in volume, we try to at least grow at double the rate here. So we're able to then bring in margin. But yes, since we are growing in all the segments, whether it's agri or car or motorcycle and B2B. We want to really focus on both volume growth and also keep the margin band and continue investing in our brand and other initiatives.
Okay. Just want to, narrow in on the biking segment. That is something that you've spoken about in terms of, a key focus for the company going forward. Tell us, how did that particular segment do for you this time?
So it has done very well in quarter four. Actually, our motorcycle segment, we have the standard range, which is the mid range of the. And we're also looking at going to the premium range, which is the adventure bikers. So we are investing in our brand there through the India Bike Week. So motorcycle has been one of our key strengths. In fact, we have just launched a campaign for Gulf Pride with a new pack and with the highest specification in the industry with a long drain interval of 10,000 kilometers. So this is really where we've been delivering the best products. We've also gone to the right at the top end with the adventure bikers. And we also have a range for, the value segment, which is called Zip. So we've kind of segmented the market and are focusing on this because this is one of our strengths. Even our brand consideration and brand awareness is in the top 2-3 in the industry. And motorcycle is a key driver for us. We have Mahendra Singh Dhoni, who's our brand ambassador, who's also a very big biker, as we know. So we are promoting our brand, our distribution. We have bike stops, which are branded garages. And we continue to grow with the bazaar segment and with OEMs like Bajaj.
Right. What about, Tyrex and EV batteries? I remember Tyrex, you were targeting 500 to 700 crores with that EBITDA break-even coming by soon as well. Where are you on that path? And EVs as well, you had a target of battery business to do about 300 crores of revenue. Where do those numbers stand?
So happy to share that our business, DC charging business, which is Tyrex, has actually tripled in their revenue and crossed 75 crores this year, 78 crores. So that's a start, I would say. And we are projecting 400 to 500 crores in 5 years' time. Tyrex has about 8 to 10% market share in DC chargers. So that's going well. We're going to expand the factory, expand our service. So that's doing well. Obviously, it's a start in terms of our business. And we've got a lot of chargers installed across in terms of DC charging. They are also manufacturing AC chargers, and that will also help us. And overall, in terms of batteries, I'd just like to tell you that we are into two-wheeler batteries since a number of years. This is mainly for the traditional two-wheeler batteries, but we've also started supplying some batteries for the EVs, for the auxiliary start. So these are VRLA batteries. And that again, we are happy to share in both these businesses. We are now positive in terms of our EBITDA.
How much are they contributing to the business as a whole, and how much do you want it to contribute? What is the target?
Currently we are happy we crossed 3,500 crores as a revenue as a company in this year. And batteries, two-wheeler batteries about 75-80 crores. And Tyrex is a similar turnover this year of 75 to 80 crores. But ambition is that in the EV charging, DC charging, we can go to 400 to 500 crores in 4 to 5 years' time.
I have to ask you this. What is the difference in the market share between you and the leader? And we understand that Castrol is on the block, right? Would you be interested if there was something which was on offer?
Well, let me just tell you in terms of market share, we are definitely the second highest market share in the private sector. And we do have a lot of opportunity to grow somewhere in some of the cases where we are less than 5% market share. So I think overall that is there. And yeah, we'll have to watch the developments on what's going on, as you rightly mentioned. So I think a lot of interest is there for many, global players and other players. So we'll have to wait and watch this space, I think.
Why do you think that would have happened? Is it because the industry is, it does not look very feasible for players in this space, for an industry leader to actually go ahead and, offload its asset? What do you think has driven this? Is it just an individual case, or is it a sectoral call that BP would have taken?
Well, I think that is for them, but I can tell you the lubricant market is a very good market in India, and also it is growing here. So it is a very good market here and other countries also. Definitely in the Western world and developed countries is flattened out, but lubricants as a market is growing very well in India. We've also been leading that to explain to people, and we are seeing the impact that a lot of companies are coming and making investment in fresh production facilities. Indian companies who deal with lubricants have expanded their base oil. So I think India and a lot of the other markets, you are seeing growth, obviously due to reasons of economic development, industrial development, penetration of vehicles. And even if EV is coming, we still see lubricants growing 3 to 4% in the next decade. And maybe it will just go a percentage down after that. But India is an attractive market. So I can speak for that yes, there is an interest in this industry. I think companies would take their calls based on their priorities for us, it's a focus, and India being such an important market, I think many players are coming into India. We have seen that over the last 2 years.
You have, 450 odd crores of cash, and update the figure if you can for FY25 ending. What's the plan for utilization then?
Yeah, so we are happy to share that our board has agreed on a final dividend, which is a record 48 rupees, 1400%. And we have got 1,000 crores cash. We crossed that milestone. So I think keeping that in mind, obviously we are returning to shareholders, but we also will look at some investments in the EV mobility space. And maybe that is what we have done with Tyrex and a few others. So we'll continue looking at spaces where we can invest. But currently, obviously, the dividend has been announced. So it's been a record dividend also.
All right. And you are not interested in buying Castrol, if at all it comes to that?
So no comment on that. I think, as I told you, the market is attractive. It's for everybody to look at what there is. Consolidation keeps happening. So we'll have to wait and watch.
Take that point. Thank you so much for joining in and fielding all our questions. Ravi, always a pleasure speaking with you. With that, we'll leave you. Wish you good luck for the remainder of this year. Take a short break. Come back on the other side. Pearl Global Industries. The management joins in to discuss their fourth quarter numbers.